Hi, this is Mark with your analysis for the week commencing the 3rd of April. I showed you in great detail last week here on the Aussie dollar yen why I thought it was my trade of the week. And I want to go back over this now. This is not to gloat and show how clever I am, but to show you what we were looking for. Now, as of last Friday, a week ago Friday, price was down here. And what I was telling you is I was looking for a break of 83.50, which was a major area of support and resistance. Price eventually broke through, and what I said was to then look for a pullback to the support and resistance line with a view to a move upwards. I then suggested that the first area price would struggle would be here at 84.45 and 50 area because it was previous resistance. And then I suggested that if that broke, then the next final target would be up here at 8800, and it got within about 20 pips on Friday. And the reasons why I went for this trade out of all of them was because we were looking for a break of support and resistance. Support and resistance is crucial in anything that you're doing in Forex trading. And then on top of that, we were looking for what I class as other clues, where we were riding the 5 EMA, we were up above other EMAs. And a specific thing I was looking at was I showed you how the monthly candle, and this was last month, this is March's candle, was looking to close as a pin bar candle like this. And usually this kind of candle formation suggests a strong move up. On a further point that we had of interest was that the monthly Bollinger Band had opened. So there's lots of things here to suggest that price was going to move upwards, as it did. Now, what's going to happen next? Well, this is the next major area of resistance. So if you missed this trade and you're not in it at the moment, then what you need to be looking for is this. What happens to price when it gets to 8800? Either we look then for a bounce back down, and it's likely to range within this area, or we look and wait for a further breakout, then a pullback to 88 and a move forward. Now, of course, we won't be doing that off a monthly chart. This is a daily. So on the daily chart, as I say, look at the market open, watch the Bollingers in particular. I mean, if it closed, then it would certainly suggest it was going to go back down. If price gets outside the Bollinger, it suggests it's going to go down. But support and resistance, I say, is crucial, and then it's a matter of looking at other clues. I also showed you last week the euro-yen. Now the euro-yen, this is a good study that we did with Mentor Pro. We were looking here for 4 months for price to break this monthly trend line that has gone back to 2007. So again, on the subject of breakouts, what we do is we wait for a candle to close through an area. And as I say, we had 3 fake outs. So it looked it was going to break and it didn't every time it stopped. Then the candle breaks through, then price starts to move away. We were looking at various clues here. We were waiting for 5.8 to cross. We had MACD divergence, lots of things to suggest it was going to go. And there are lots of these pin bar candles on the monthly candles just closed, guys. So have a look through yourselves at the monthly charts and see what's happening, and particularly pay attention to those and to the Bollinger Bands. Now here on the daily, I was more wary with this euro because of the fact that the euro news and the Japanese news could conflict with each other, and we could have ended at fake out. Now as it was, it worked perfectly. Where has it stopped? It has stopped at a previous area of major support and resistance on a weekly chart that again goes back to 2009. So we are getting extreme moves of late because of news, but price is stopping at areas of support and resistance. Once again, with this euro yen on the daily, you would be looking, this Bollinger Band is likely to close through price at market open. Therefore price will at least come back to it, but the way to trade this would be to take a short if the candle formations on the 4 hours say start to return back down. If not, you wait for price to break and close above this area with a view to move forward. The dollar yen on a weekly. Now this for me has been untradeable in recent weeks. The problem with this is that the Bank of Japan have just confirmed that they sold $8.3 billion worth of yen in February and March to try to weaken the currency. They are intervening, and the G7 have been helping as well, and therefore we're trying to trade technically, and yet there's all this manipulation going on in the background. It's very difficult. But what did it do? It stopped to the pip on a line that I've had in place on this weekly chart going back to 2009. It touched it, fingers in the fire, and bounced back off again. So major areas of interest again for this. If you decide to trade it, personally for me it's in a long-term downtrend and I'm only interested to short, but this is the major area to be looking for clues, either a breakthrough or a pullback down. This is a dollar yen on a weekly. What you may find, again, we tended to be range bound with this pair a lot. These will be the major areas. If you're looking for a long, then 83.30, and if you are looking for a further long and say it's a break and close above here, or a bounce back down again. And this is euro pound on a monthly chart. And once again, we have been looking at this for months, and what has happened, price finally at the end of March closed through this upper trend line. There's major news this week. It is strongly expected that the Eurozone are going to raise their interest rates, and it's now a matter of by how much. If, for example, by any chance they don't raise the rates, then this will plummet. But price has already been factored in for some kind of interest rate rise. But on a technical nature, we have broken a major area of support and resistance and a major trend line. It also happened to be a 78.6 fib on a weekly that we've broken. So, way to play it? Well, we look for ideally a pullback to this trend line, which just happens to be around 8700, which is a major support and resistance and psychological level. If you look here along here, this has been important going back months and months and months. So this is the one I am particularly going to watch this week. However, be wary, there is British interest rate news not expected to increase, but the MPC minutes may show a greater division on the voting. But this is that break of that trend line I showed you. It's also a break of a weekly 78.6 fib. So longs at 8800 if you are trading intraday, and if you're trading off that monthly, then you start to think in terms of a pullback, as I just suggested, all the way back down here, potentially to 8700. This is a pound dollar on a weekly. This has been very, very messy. This is a flag pattern. We've had this trend line in and it keeps bouncing off it. It's all over the place, is this one, guys. And as I said to you, this week is Bank of England interest rate news. If by some chance they do raise interest rates, then this is likely to rocket, because at the moment nobody's expecting it. Of the 9 voting members, only 3 voted for a rise again last month. But Britain does have a problem with inflation. And this is the pound dollar on a daily chart. And what's been happening is price has been bouncing between 160 and 163 area. And those would be the main areas. If you're looking to long, then particularly watch 1.6065 tomorrow. This, for some reason, strange number, but has been an important area of previous support and resistance. So it could be that we would look to long there. I would definitely look to long at 160 again, but not on the interest rate news day, or certainly not around the news. If it does get back up here, then areas where it's going to struggle and potentially turn back down around is 63 to 63.40. This is the Aussie dollar. Now, the Aussie dollar is now up in no man's land. We've nothing to compare this with because the Aussie dollar is way above previous price. It finally broke last week through 1.0258, which was previous major resistance. And you can see it struggled here, finally got through, pulled back, and off it's gone. Bollinger Band is wide open. The weekly candle was a bullish candle and the monthly was a massive pin bar candle, so it does suggest it's going to continue to go. However, price rarely goes in a straight line continually, and we have had here 1, 2, 3, 4, 5, 6, 7, 8 with 10, 12 days consistent movement here. The way I would look to play this, I need a pullback, and there has been talk at the weekend. I think the Aussie dollar, the Australian government are trying to talk the Aussie down. They don't want it this strong because it hurts their exports. But they say that the knock-on effect of the Japanese earthquake means that in the next year, Australia is going to lose a chunk of its export market. Japan imports a lot of steel ore and coal from Australia, and a lot of the factories have been destroyed. So there is a strong possibility the Australian government will certainly talk it down, may even intervene. But for me, I am only interested to long, and this would be my major area. Final one is the CAD. I was showing you last week when price was up here when I did the review. I said to you I would only be interested to short, and my first major area of interest was 98.16, and it actually gapped within a pip or two there at market open and promptly fell away 200 pips. Now, we have been down here before. I suggested at the beginning of the year that this could get back down to 90 again this year. And if we have a look, this is a monthly chart. On the monthly, I was showing you 2 months ago how the Bollinger Band had held the price up, but then the Bollinger Band opened, gave him permission for price to fall. This figure here is September 2007. We've been down here before, and the low at that time, it was a double bottom on candle close, was 94.30. So I do expect the CAD to keep to fall, but we need a pullback. Now, there is Canadian news, Canadian jobs this week. There's a lot of fundamentals though going on that support Canada in that oil prices are up and they are a major exporter to the US. And the fact that the US came out with some slightly better figures the other day suggests that their exports to the US with higher priced oil could be even better. My initial area for pullback would be around 9,700, 96.80 to 9,700. Ideally, we really want a big pullback all the way, say, to 97.50, and if we're really lucky, 9800. But at the moment, that seems unlikely. But we trade this technically. So technically, it has broken 9700. Therefore, we're looking for a pullback with a view to short. I would not be interested to long. And you will notice, if you look back at my weekly analysis, that most of the time, probably 85-90% of the time, I get the trend right. And the trend, I said to you at the beginning, support and resistance is fundamental to Forex trading, but equally important is following the trend. If you trade with the trend, then you reduce your chance of losing. So anybody starting to want to long the CAD here when everybody else is selling would be a risky game. Yes, you can do it, and some people swing trade, but to me it's too risky. Trade with the trend, reduces the amount of trades you take, but it also reduces your losses. So have a great week. Let's play this day by day. There is a huge amount of news this week, and I will update you every evening as to what I perceive will happen the next day. Have a great week.